Let's go. Boom. We're live on YouTube. Let me get the YouTube link up so we can see what the 3 people who comment will comment. 1 second. YouTube. Bam. Hit the gym early. Yeah, how many of you are morning people versus like late night people? By the way, gonna call it already. I am soon. What? I'm out soon. I'm legit dying since 4 days. Oh, okay, right. That's fine. That's all good. Okay, right. We're live. We're live. Let me just send this out to the Discords. There we go. I can't bother adding a picture today. Boom. That'll do. Hitting the gym early in the morning is the best. I tried it, but early for me is like 4 AM. God damn. Oh, you start early, I'm guessing, for work. Oh, should I try and do it tomorrow? I'm gonna be knackered. Should I try and like re-script my entire routine? Because tonight, deadly serious, I would probably go bed about 3 AM and wake up 9:30. Realistically, that's what I'd do. Should I try and go bed by what? Let's say 11 and wake up at like 7. I reckon. I'll try it. Okay. I'm gonna try it. I'll post progress pictures in the Discord to hold me accountable. 11 PM, go to sleep. 7 AM, wake up. That's 8 hours of sleep. That's plenty. Wake up, load of water, like a liter of water, and food. And then workout. Okay. Workout also includes cardio. And then come back, have a shower, do my shit. Not have a shit, do my shit. Can't wait to see Limp Leon every day. Right. Don't know what that means. Well, do, but that's crazy. Get a home gym. Oh, little arms. Okay. Well, have any of you guys heard of peptides? Just random question. Has anyone heard of peptides? Because peptides have been popping up in my life from every single person on Instagram, my friends I speak to, everyone has been like, oh, just hop on peptides. Oh, just hop on some Retta. Oh, hop on GHK. Oh, just hop on peptides. And every single day, someone's Instagram story, a random trader's Instagram story, or a random friend that I haven't spoke to in 6 months, I start speaking to him. He's like, oh yeah, I'm currently on GHK and Retta or some shit. Like, what? And they're getting ripped. Obviously, I'm not consistent in the gym yet, so I don't even want to think about that stuff. But I want to get consistent in the gym, so then I can hop on that shit. Because, yeah, I don't know, they look overpowered. They look overpowered. With secret sleep schedule your body actually wants. 11 PM. Oh, I'll take that. 11 PM, yeah, wake up at 6. Okay, 7 hours. Oh. Yeah, they're biohacking essentially. Yeah, I might have to do it, I can't lie. Anyway, right, let's go over some trades. So last week I took 1 trade, got fucked, quit. That is basically the story of my life. GJ took this beautiful break retest, which had London close timing. Okay. Trade was looking okay. Well, the trade wasn't looking okay. As you can see, it was shit price action. So wasn't looking too good. And then what do you think this was? There was no news scheduled, nothing. I'll tell you what it is. It was Japan's Prime Minister saying some shit about the JPY. Just randomly. Here you go. Just randomly, you know, talking shit. Here we go. Where was it? There it is. Sharp drop as Japan's Katayama hints at yen defense. I don't know if it actually... No, let me do backtest fundamentals. But yeah, anyway, just randomly just got fucked. And that is basically the story of my life. There it was. There, that move. It doesn't say here. which is really annoying. Ah, there. This intervention. Ah, it was an intervention comment at 2 a.m. Was it at 2 a.m.? Was at 2 a.m. So they're talking about intervention. Yeah, it's still a Mrs. Prime Minister. Well, she's only just gone in charge, right? Katayama. I swear, like, she's Japan. Oh, Minister of Finance. I swear Japan just got a new Prime Minister, woman, or some shit. It's the Market AI website. I don't know who, eventually. They've just added this notation thing. So it tells you exactly, like, it has it, like, what's happening 24/7. Around tensions, bam, gold. Yeah, they've just added this feature. The feature is insane. Look how cool that is. It tells you exactly why price is moving. Because originally it was this, where you can just click any candle and it'll tell you what happens, like this move here. You can click it and it'll tell you. But now they have this, which is pretty cool. Pretty damn cool. You can see everything. Yeah, anyway, a Trump tracker as well. See what Trump is doing, all that shit. Anyway, yeah, so I use this now to quickly... yeah, it is a premium thing. It's pretty spenny as well. I think it's like 50 a month. I think it's 50 a month. Yeah, but I am a content creator, so I get privileges. Yeah, anyway. Right, anyway, let's go over some trades. Euro Aussie dollar, break retest, was looking nice. Price now moved away from it. It's kind of looking a little bit shit now, but I would still take it with like timing or alignment. So I would still give that a go. Euro NZD. We broke this, which means these sells are kind of validated now, but we have these wicks and then we have this upper wick here. I would much rather go for the upper one with a break of this one. This fib isn't valid because it's to this low, so you'd have to draw that fib. Let's see. 61 fib lines up. 61 fib still lines up. Does it? 21 pips. It's not the nicest, but if we saw a breach of this and a push into here, I would take that with stop loss just above, take profit just below. That would be nice. That would be nice. So I will also set an alert for this. For buys, we have the EMA popping up, but obviously I'm not really interested in that. This doesn't, obviously it doesn't have a fib, so the only thing we can take this with is timing or alignment. Fucking hell, man. This is very, very intense analysis. Timing or alignment, done. I'll set an alert just before kind of body. Because realistically, if I was entering a trade on this, I would go for something probably around there. Just roughly around there. Okay, so my alert should probably be a bit higher, to be fair. Yep. Timing or alignment. And then same with this, but I'm not going to mark that out. Okay, boom. We can delete that lower alert. Boom. We can delete these alerts up here. Your ends of D. Bam, we're fucking whipping through this. New fib. Yes. We have the 61. Yeah. Valid. The 38. Valid. This level just above. Does it interfere? No. Valid. Only just valid. But I think I would take that. So I will ping an alert here. I'm guessing you guys probably have the same thing. We may have like a... Oh, that is the smaller fib. Never mind. We may have the bigger fib. However, I don't really know. 38. This fib isn't actually the nicest, to be fair. Oh, I guess this fib is 100% valid. Never mind. This is valid. It's just that big fib with this as the low. Obviously, drawing a new low based on that tiny ass breach is pushing it a little bit. There's a little bit aggressive. Whereas this one's completely fine because it was to this low, then to this low. And now we've had like a strong ass move. I would draw a new fib. I don't know. It's very subjective, but I would. I personally would. So that is a trade. 38 fib, sell. This one is the backup. So obviously if this first one fails after some shit like that, maybe, then we'd also go for probably enter as that one hits stop loss, to be fair. I would do something like that. That is what I would do if this one breaches. So yeah, that is valid. GN. Did anyone take the 50 on GN? Because can we look at NU as well? Yeah, we'll look at GN and then we'll look at NU, sure. Because that kind of goes hand in hand. This GN level did 25. So if you did take that, you got fucked. Was it nice? Yeah, it was kind of nice, to be fair. Did it have news or anything? I can't remember. 9 o'clock on a Thursday. But anyway, that level got fucked, which means... Did it get fucked? Let's just double check it didn't get not fucked. You know what? I will actually check market AI because this is actually kind of helpful with this thing, with that thing. Let's add GP enter D. Shit. Now that they've added this feature, I can't lie, I probably will actually start using it quite a bit. Because it is kind of clean. Okay, so this is the hourly time frame. This is the move down. The move we're looking at is that initial little push, which is here. Oh shit, fuck. Yeah, so it wasn't news driven. US boost risk sentiment. I didn't know US Taiwan had a trade deal. I didn't even know that. China stimulus, initial pullback amid overnight volatility. Yeah, there was nothing. So this level was just literally just breached. So this is technically a breach. And then you have this, which is the only level up until here, which has the EMA. This level is fucking beautiful. Absolutely beautiful. But that is another 80 pips. And that is the only level in like 170 pip move down. So has this had a decent pullback yet? It did that pullback of 60. Wait, where the fuck did it do 60 from? Here. It kind of reacted to this kind of body close, which, I mean, if we... Nah. I think I will take this with alignment or timing. Because the breach, it has had a reaction from this, which isn't the cleanest. But I would take this with timing or alignment. I wouldn't normally because this is kind of an intra level. Like it's a bit of a weak level compared to this or this or this. But with timing or alignment, I think I will take it. But obviously this depends on market open as well. Obviously we're going to see quite a lot of shit happening over the next few days, if you guys didn't know, because of one individual, this little batty boy, aka Donald Trump. Now, as you can see, these countries, Denmark, Norway, Sweden, France, Germany, UK, Netherlands, Finland, basically all of the EU have said to Trump, nah, you ain't taking Greenland, it's ours. So Trump has gone, well, fuck you guys, I'm going to slap a 10% tariff on you, and in a few months, I'll up it to 25% if you don't give me Greenland. So now he's blackmailing them. What the fuck? How crazy is that? They say no. He says, well, I'm going to stick a tariff on all your countries. And if you don't say yes, I'm going to increase the tariff. What? Oh, yeah, I know it's strategic. Yeah, fucking hell. Oh, are you talking about the 30 soldiers? Yeah, no, that's also... Because if you didn't see, like, UK sent 1 soldier, Germany sent, like, 3 soldiers. It's so that those countries have soldiers in Greenland. So if the US acts on Greenland, then he's technically acting on all of those countries. It's not actually sending 1 person to defend it. It's just so, like, if the US does do something against Greenland, technically he's also doing it against all these other countries that have soldiers stationed there. Technically, yeah, so it declares war on NATO. So that was the reason. People were like, oh, what's 1 soldier going to do against the entirety of the US? Well, obviously they wouldn't just send one soldier, would they? Yeah, but that's crazy. How do you distinguish between what's actually a valid fib level versus what's confirmation bias? As in, like, what's a valid trade? What's a valid lineup? As in, like, how does a fib line up? Are you saying, like, what conditions need to be met in order for a fib to technically line up with a level? I'm guessing that's what you're asking. So yeah, that's GN. Timer alignment with this. We do also then have this break retest, which could be clean as fuck. So let's just draw out the scenario. I know that's a small ass fib, but I mean, that is a small ass fib. Because let's say it did tap into our level. That's covering, like, you're going 3 fibs across your stop loss and take profit there. So you couldn't really do 40-40 on that. That is quite aggressive. Even though the entire move is 230, 40-40 doesn't seem too crazy. I don't know. Unless you wanted to go with that for like a 30-30 or something, but I probably wouldn't. I'd rather it push a bit lower. Enter the USD. You wanted me to go over? Oh, absolutely nothing here. The break retest. I mean, okay, never mind. There is actually some levels. Never mind. That isn't valid. That break read, one sec, Duck. I'll just quickly finish this and then I'll go over your question. Okay, never mind. I stand corrected. 61 fib, beautiful. That's a valid zone. That's only 9 pips wide, which is nice. And then let's look for sells. I don't know if that's enough pips. That's the only thing. This is only 130 pips. He'll answer it doing this. Watch this space. Oh, I don't know what is that. Whereas this is only 140 pips. So I don't know. I couldn't really do that. That wouldn't really be valid for me because obviously we can't really do much. A 30-30 looks like that. You can't really class the fib as a confluence when your position covers 2, maybe 3 fibs. So this NU would have to be pretty big, which is why I don't trade pairs like this. Same with like Euro GBP and some Swiss pairs. Because if I draw any fib on EN, for example, even, I don't know, let's find like a small fib, like just this little fib here, that is a solid 500 pips, which means if I do put my 40-40, for example, it's actually using that fib. It's not going like this. I can't use the 61 fib as a confluence, or I can't go for the 38 fib break retest and do that. Obviously not. Yeah, no, NU, yeah, NU, 130 pips for NU obviously is a lot. Yeah, it's a lot for the pair, but it's just then you're gonna have to rework out your stop loss take profit sizes because you can't be going for 30-30 on that. Like, that sell fib, that's been what? That's the process of 23 days, almost a month worth of price action. And that 61 fib is a beautiful trade. But you're going to have to rework out your stop loss. I would probably end up doing something like that, 2020 maybe. But obviously, you're then going to have to do the back test and a data collection to work out what to use. So I can't be asked doing that. Right, so like for example earlier you were drawing out the fib and you didn't like the level originally, but you moved the drawing around until you found something that looked good. Do you remember which pair it was? GN.
I hopped on mic.
God damn, you scared the shit out of me. My speakers are so loud. Oh my god.
My bad.
Go for it.
But yeah, so kind of what I was looking at was like you drew out an initial, you drew out the fib drawing tool. And
yeah.
You looked at it and you were like, all right, that looks bad. How do you differentiate between, like, say you have a bias? I guess this might change things, but say you have a bias, like you think something's going to go long. And so you have all these levels and you draw out your fib and the first one doesn't look good. and then you find like another high low to draw the fib on, and like, oh, suddenly that one looks good. Um,
So
how do
it's not
you
really that. I
know
don't think
which
it's the
ones?
level that was bad. I think it was the fib lining up with a level which was bad.
Okay, so
I,
so it's based on the level, and then you're just drawing the fib afterwards, and be like, and then like, oh, the fib. You
yeah.
have all of your confluence, or you have all your levels, and then like, oh, and the fib fits here, and
Hmm.
then so that's like
Was it with this
that's like
pair?
the one
GM.
extra. I don't even remember which pair it was, to
Okay.
be
Okay.
honest.
Okay. Yeah, it's hard to. Yeah, let me try and find.
Because I mean,
That doesn't have any
because
fib.
basically what I'm trying to say is like I've
Yep.
experienced many times where you can like draw so many. You can draw, for example, like so many the support and resistance levels, and then eventually
One will line
you're
up.
gonna get like a support and resistance level that will line up with what your bias is or what you're thinking.
So
And so
yeah,
you're
this
like,
is the problem with
oh,
the fib.
suddenly a support works in my favor.
Yeah.
Then we're good. We're good to go.
Yeah, no, this is
How do
a
you?
problem that most people face, like when they're drawing like something subjective. Obviously, EMA is on the chart, so EMA you can't change, so everyone sees the exact same thing. Whereas a fib, you can technically go, okay, this is the fib. I can also draw the fib from this high. I can also draw the fib from this high. I could then zoom out
I
even
guess
further and draw an even bigger fib, or I could go
so.
even
I guess
shorter time
my
frame
question
and
is,
go for it.
which one? Which one?
So I
Which
just
one
have
do you
like
want to
two
take?
fibs. Obviously, this is still subjective, but I always have two fibs. It's like the most recent push down and then the longer term. So for me, I would see, I don't know, I personally see this as the main fib here. Out of most recent price action. But then you also
That
technically have that. I don't know, it's just then you don't want to go too small. Because then it's like, I don't. This is a bit of a shit example. This is a bit of a tough one, really, because all we've done here is absolutely nothing. We've been trending nice, and then we've just done absolutely fuck all. So this is like a really bad example of a fib, and that's where you kind of got to squeeze out like 2 or 3 different fibs there, which is then like which one is the strongest fib. But like for a good example, this is the easiest one. You can clearly see. I mean, first of all, for a fib, when the 61 fib is broken, I redraw the fib. So for example, this, the 61 fib is obviously golden ratio, golden fib, whatever the shit. It's meant to be like the strongest point of reversal, and it's meant to identify like the trend is still going. And if it breaks the 61, then technically that uptrend has been broken now. It started a new trend. So when I see the 61 fib broken like it has here, this uptrend has ended. So that's it, done.
Okay, so now
so now I'd start the new uptrend from this low point. And as you can see here, this is pretty obvious. We are even drawing the fib. You can see this is the start of this uptrend, obviously.
Yes.
And on top of that, if you draw the fib from whichever low you want to do it from, I mean, technically it's meant to be from, fuck it, we'll just do it from the low. The 61 fib hasn't been broken. You see it pushed to this, first high here, came down, respected the 61. Pushed to this next high, came down, respected the 61. So this trend is completely valid, and that would be the most valid fib for me.
Okay.
So there
you
is
would
like
expect
no
it to bounce up. Sorry.
Yeah. So as long as it bounces off it, or like a wick closes above it or whatever. So that, like, on technicals, that is the most valid fib on this chart. That one isn't valid. This one isn't valid because I can guarantee that broke the 61. The only other valid fib is if you want to go super long term, because as you can see, 50-ish, go up one, came down to the 61, fine, and that's it.
Okay, I see.
So that's the only two fib. I wouldn't then go, okay, well, let me draw a fib from the start of this trend in 2022. Obviously not.
Yeah. All right.
So
I get it. I get it.
yeah,
I really helped.
it's just for that example there. This one is pretty shit because, I mean, just the price action alone. Oh, not this one.
Yeah,
Was
it
it?
just is
GM?
what it is, kind of deal.
GA. This one. This is just messy as fuck. Like, where is the start of this downtrend? You would technically say there, but it's not really. It's downtrended, and then from here, you've just had just choppy price action.
Chop.
So that is the main fib, but obviously, if you look, it's already come up, used the 23, the 38, the 50, and miss a 61. So right now on this fib, the only level I can take that hasn't been used yet is a 61. And that's probably 2 months away. So,
Okay.
like, this just isn't relative to me right now.
Gotcha.
Yeah. And then usually, like, for example, this fib here was beautiful. Obvious, clean push down. But as you can see, it used up all the fibs, 23, 38, 50, 61. So now this fib is useless because all the levels have been used. And then when it breaks the low, as you can see, it comes down, breaches the 0 and creates a new low. So technically this fib is now valid again and you can take all the levels. However, for me, based on like my data collection, I still think this is quite aggressive. If it wicks below by like the slightest few pips, to me, that hasn't really broke the low that strong at all. Yeah, it has technically breached the low and new market structure or whatever, but that breach was not strong enough at all to validate a completely new fib. So for me, like when it's breaching a low, I need like a solid candle close below that low. But again, it's done the exact same thing. We've created a new low. I don't really like this fib because it's only just breached the low and it's done the exact same fucking thing. It's breached it by literally like a few pips. However, it has done a solid candle close, like a big ass push. So usually for me to draw a new fib, I want like an actual break, not just some little pussy little stop hunt thing. Yeah. Same with GJ. This is another example of like a shit situation with a fib. Because if I was to zoom out, right, you've either got the big ass fib from all the way down here, which is pointless because I'm going to be waiting 3 years for it to hit one of the fib levels. You then have, I would say the most recent push up is from this low, personally. This one isn't valid because if you draw the fib, it's definitely breached the 61. As you can see, there you go, the 61's here. So I would say this is the most valid recent push up. But again, if I draw that fib, you got the 23 and apart from that, the 38, and those are 250 pips apart. Again, I'll be waiting 2 weeks before it comes to this 38. So I'm trying to draw like the most recent push. So this is where it gets like really subjective because then what would you call the recent push? Would you say it's this most recent push? Or would you say it's this most recent, like the most recent push? And that's where it gets a little bit subjective. And you've kind of got to take a step back and go, okay, do not force anything because I can guarantee people would draw this, go, nah, that don't line up. Let me draw it from this low. Nah, don't line up. Let me draw it from this low. Ah, it lines up. Let me take the trade. I don't know. So you've just got to kind of find the one that makes the most sense. So to me, it's either this, and then you could argue between this or this. I wouldn't draw any other fibs.
Just for example, in like 2 weeks from now, would your strategy look at, because one of those fibs you drew out was like, oh, this won't happen until 2 weeks. Would you in 2 weeks be looking for something like that, or is it just?
Well, yeah. What I'd do is like,
it's too old.
Yeah, once price starts pushing towards the levels, then I'll redraw the fibs. It's just I can't be arsed.
Okay.
Can't be arsed having like 3 fibs on my chart.
That makes sense.
It's just based on recent price action because I don't. There's no point me drawing a fib and having a setup down here because I'm gonna be. It's just gonna be sat on my chart. Like if you literally, if I just draw the things right now, you'll see how much of a mess it'll start looking. There you go. As you can see already, there is so many fucking lines on this. That is unusable. So I just keep like the most recent ones. And whenever we come to a new level, I'll then draw a new fib and just check. But yeah, the fib is really subjective, which is why a lot of people then just don't use it. But as long as the logic makes sense in your head, that's like the basis of my strategy, honestly, like is just logic. Like if the logic of the concept or strategy or the confluence just doesn't make sense to me, I won't trade it. Yeah, that's it. So like this one.
Cool, thank you. That one.
That's all right.
Really helped.
It's okay. We'll look at GU. Yeah, that's okay. So like again with this one, like UJ, there's so many starts to this. You could either go really big and go all the way down here. I see this as another leg, so it's kind of done this shit. So you could either draw it like from here. So it's probably this, or then I'd go super recent. And I'd go personally, I would say that is the most recent leg. So those would be the 3 potential fibs for me. I think they make the most sense. See you later, Falco. Thanks for hopping in, man. I appreciate it. Yeah, so they're the fibs that I have currently. We'll look at GU after this, Anon. So for UJ, we have obviously the break retest. Unfortunately, there is no fib lining up right now. You do also have these 2 break retests, which was this one and this one. We got quite a few break retests here. So this fib is useless. May as well get rid of that. It didn't line up with anything. Did it line up with 61? No, literally nothing. Did price react from this on Friday? It did react from that. It did 40 from this level. So that break retest has kind of been used. So now I would still give this a go, but again, time no alignment. Which, I mean, whilst I'm going over shit, may as well. Timing is just basically session open and closes. I prefer session closes. And I mainly just look for pound London close, so 4 p.m. And the reason for that is all the big banks, big institutions, big money people, all that shit, the market makers, whoever the fuck they are. Obviously, they need to get out of positions before the market close. And if they need to get out of positions and market closes, you're most likely going to see some sort of reversal around the market close because they're getting out of their positions, not buying in and pushing trend even more. Of course not. Price is going to stop and reverse. And you'll find that quite nice, especially with obviously pound pairs, but this is UJ, but it'll still have some sort of effect. So finding little London close alignment would be really nice, or actual alignment. You have market alignment, you have driver alignment, you have market alignment. No, you have driver alignment, you have Forex alignment, sorry. Driver alignment, we'll start off the easy one. Forex alignment is just literally finding any other USD or JPY pair that lines up. So UJ coming to a buy level, GJ also comes to a buy level. Let's say this one. There you go. You got 2 JPY levels coming to a level at the same time. There you go. You got double the confidence. 2 JPY pairs are separately coming to a levels. So there's a high chance of them both moving in correlation, whatever the fuck you call it. And then driver alignment is then actually finding a reason behind the move. So if UJ is suddenly pushing down, is it a USD driven move or is it a JPY driven move? It has to be one of them, or it can be something else. But if it is a USD driven move, then obviously I'm going to check what is causing this USD move. Is it yields? Is it stocks? Is it DXY? And then I'll go to that driver and wait for that driver to hit a level, and hopefully that aligns with this. Or if it's JPY, you can go and check what is pushing JPY. Is it stocks? Because quite often it's stocks, and obviously this is inversely correlated to currency value. So you'll find as stocks go up, currency will go down. So for example, if we were looking at a UJ buy from this level, this means USD going up and JPY going down. So what we'll be looking for is the Japan stock market to be hitting a buy level. So if you do this, you do this, you do this, you do this, this could potentially align. As you can see on the Japanese stock market, we have a big break retest. So there you go. There's potential alignment. So this will cause, as you can see, JPY weakness, and so will this. Stocks down, stocks up from this level, JPY down. So that is potential alignment with Japanese stocks. Yeah. Cool. Okay, nice. Right. There's no point going over gold again because gold went out. Well, yeah, there's no point going over gold realistically. We saw this move. Does anyone know what the fuck this was from? Because I can't lie, I wasn't even on charts Friday and gold dropped like $100. 85 fucking dollars. What the shit? I'm guessing it's because of the tariff. Wait. No. Couldn't have been because of the tariff. Gold wouldn't go down because of tariffs. Gold would go down because of positivity in the stock market and confidence. Tariffs would, wait. Tariffs will pump it. Yeah. Sorry, you got me confused. Yeah, tariffs will pump it because that's more fear, more uncertainty. So people go into long-term commodities, hard assets. Yeah, more fear. Exactly. So it's actually something to do with, I'm guessing stocks went up. Surely stocks went up on Friday then. Potentially. Well, we checked DXY. DXY went up. Oh, you know what? I've not done it in a while. Oh, wait, we can just check. It could have been USD driven. Stocks didn't do anything. So it was dollar driven. It must have been DXY driven then. Because stocks didn't do anything. Let's just check. What the fuck? Oh, here you go. Sharp. Oh no. Fucking hell, I can't find the shit. Someone find me that one. Gold crashes as Fed Bowman hawkish comments. Eh? Really? Two days ago. Given risks in a... Oh, fuck off. The Fed should be ready to cut interest rates again. No? How does that make sense? Because DXY went up. If they wanted to cut interest rates, then DXY would go down. Gold crashes on Fed Bowman hawkish comments. Gold also crashes $56 here. Or $30 with Fed Bowman comments as well. Wait, what was that? What? What was that move pushed by? Wasn't US housing data. Was it this? Trump's ambiguous Fed chair comments created market uncertainty weakening US stocks. Well, it didn't. Oh yeah, it did actually. Strengthening dollar. This. I don't know. Anyway, sorry. I actually had a question about breaking retest since you mentioned it, and it's something I see you and Future Hendrix talking about every so often. My strategy is pretty similar to his. Sounds pretty self-explanatory to me on the surface, but I feel like I'm kind of missing some nuance to use it effectively. Driven by pound? No, definitely not pound, because pound didn't move. Look at GU. GJ didn't do anything. GU didn't do anything. No. That didn't do a big enough drop. Okay, so break retests. I mean, so I have like, bro, what the hell was that notification noise? Never heard that notification noise in my life. That was weird. So I have like some rules for break retests to be classed as a clean, like the nicest break retest. So here's some basics. So this break retest here, the cleanest break retest you can possibly have. This break retest. Why? Because the break was clean as fuck. There was no mess around the break. The base, if you look, price literally just smashed through the break. There was no small rejection, piss about, then breach. Nah, just a clean break. So just one candle break through the level. See, like this, not as clean, but still fucking clean. This is still really nice, but as you can see, it kind of did a little mess around. You can see from the wick here, it kind of rejected a little bit, then did its thing, which it still worked. As you can see, it coming back to retested and worked. But I mean, that's not a bad example. That's still a really nice break retest. This one here, again, a little bit of a mess around, but still really nice break retest. As you can see, it did a little bit. How much did it do? 40 pips. That would have been a take profit on gold. GU. Where's the shit break retest? Let me go on gold. Gold, you see a lot of break retests. Ah, here, another one. Clean break retest. Just one candle straight through it. Unfortunately, that failed. Really clean. Here is where it's shit. This is a shit break retest. Because as you can see, it broke, pissed around, came back up, retested it, bunch of mess around the level, then pushed through. That break retest, not as clean. I'd still probably use it, but nowhere near as clean. Again, here, not the nicest break retest. Probably still use it once again, but yeah, not as clean. See how there's so many candles around the break retest? There's just no volatility at all, no volume. I just want one clean ass candle straight through it. And then another one. There you go. Here's a really nice example. Bam, straight through it. And then as you can see, came back up, missed by a little bit, and did the move. One condition for then taking the break retest is I need space. I need like time between the break retest, because what you'll see quite often is price will breach, it'll breach the level, so the initial level, and it'll come up to retest it the very next candle. You'll see that often in gold. There must be an example I can show you. Give me a sec. I mean, that one worked really nice, but no. I actually want to find a good example. Like an aggressive break retest. Ah, like here you go, here you go. I mean, it kind of worked. This is quite a shit example, but you can see you have this level. It didn't even breach that nice. It kind of did a reaction to the level. You don't really want it to do a reaction. It's better for it not to, because then you've still got that liquidity that hasn't been tapped or used or whatever. I don't know, price SMC fucking terms or whatever. But as you can see, it breaches the very next candle. It comes straight back up to retest. For me, that's a bit too aggressive, because that means volume is all over the place. There's a shit ton of volatility, and there's a high chance it's most likely going to do a bit of drawdown and wick you out. I would much rather it breach, it chills for a few candles, then comes back and does a retest. Like here, this is really aggressive, and it kind of failed, kind of worked. I don't even know. But as you can see, I mean, it kind of did a reaction from the level anyway. So not the cleanest retest, cleanest break retest. It did a fat ass candle, immediately came straight back up. It technically worked, but for me, that's way too aggressive again. But break retests are just so nice. I don't know. They're so nice. Let's look at some of these trades, Mr. Anon. And you, fuck me. Some of your, I get a bit confused on some of your charts sometimes, mate. You entered the oh, here you go, there's the trade. I didn't even see there was a trade. Oh damn, you've been in this trade for a while. Nice. Take profit 1, take profit 2, take profit 3. That's a nice trade. Bloody hell, you've been in that for a while. A few days. A week. That's a good trade. Nice catch, man. And then NASDAQ. You're not in a trade on this one. The fib. It tapped into the 61. Kind of missed the 61. You have some really interesting levels. The 30%. Do you know why fib levels are fib levels? But why do you have like the 30%, by the way, Anon? Because I don't think people know like what fib levels are actually created from. So like all these different numbers you see on your fib level are the product of maths and shit. So for example, 0.618 times 0.618. Guess what it equals? 0.382. And then I think if you do the square root of 0.618, it equals the 78 fib, which some people use. If you do 0.618 minus 0.382, it equals the 0.236, which people use. So like there's reasons why these fib levels are fib levels, by the way. Like, for example, the 30% fib, I have never seen that before. But you can't just use like the 10, the 20, the 30, the 40. The 50 is the 50 fib. I can't remember what the maths behind the 50 fib is.
Yeah, Leon,
I think it's just a mean reversion.
I would not personally take a trade off the 30% fib. That was just this fib is from a strategy from a guy in South Africa, and he did a lot of back testing on the. Let me just get the thing. He did a lot of back testing on the fib levels, the 61, the 76, and the 91 fib for his strategy. But then he makes sure that it overlaps with a deformed W or a deformed M, and then with a lower time frame order block within another order block. But I just use that as confluence from, like, I would consider a trade maybe viable from the 61, the 76, and the 91. But then I would also look at the fib that you're currently using, and then I would compare the two levels and see if there is like like an overlapping demand zone or a supply zone, and then I would consider that as a valid level to enter from.
Okay, yeah.
But like, I completely
cool.
agree with you. The 30% is absolute dog trash. I would not personally take a trade from the 30%.
Let me, how the fib levels calculated. Yeah, I'm just gonna ask ChatGPT to get the actual job. Just fucking tell me, man. That I hate when it asks me like a counter question. Here you go. Right. Well, that's just not helped. Like,
I would definitely consider like the 50% and the 61.8%. That I would consider that as like a golden zone. That's why I asked you the other day on the UJ trade at what level you're currently looking at where for a potential buy position. But I found that golden zone between the 50 and the 61 fibs usually where there's a lot of overlapping levels. And I feel like you're seeing that as well. So I would definitely consider if the price consolidates or taps into that level, I would definitely see or look for a potential buy position or short position.
Yep, okay, so it's actually to do with a Fibonacci sequence. So if you divide a number by another number 2 places ahead, so for example 5 divided by 13 or 13 divided by 5 divided by 13, oh, 5 divided by 21, what does that equal? Oh, I did not know. Okay, so that's how it's calculated. Interesting. And 50 is just like mean reversion levels. Okay, well, we learned something new today. Wow. But yeah, that is sorry. I was getting hung up on a funny business of breaks that mess around the level. Yeah, no, completely agree. I simply thought it broke, so we take the retest when it wasn't a clean break. No, I mean, what? I can't remember my logic, because I have like the logic behind like all the different confluences that I take, and I had the logic behind like break retest as well. Give me 2 secs, I can grab it for you. Because I was trying to understand like why the fuck does break retest actually work. I was trying to understand everything, so I was trying to get like ChatGPT to help me understand it in terms of the market as a whole, and like why things actually fucking work, not just like, oh, it works because there's a level. Break and retests. Okay, so this is the reason I had break and retests. This is my little oh shit. I'll paste it in the chat. That's what I had. If the YouTube want to read this as well. If you're interested. Whoa, fucking I'll get that face off there. Oh shit, we fucked up now. We fucked up. So after the initial breakout, the market needs to reset. Institutions rarely enter during volatility. They need low volatility, clean structure, and liquidity. Retests provide that clean structure. It's where the market returns to balance after excess movement, which is, there you go, the big ass break. Then it's the technicals. If a level is broken and retested, it proves the breakout has been accepted. Without a retest, it's unclear whether the market actually respects the new structure or just overshot. So that was like, that helped me kind of understand a little bit. Or at least it builds the logic in my head. That may not even be the logic and reason behind it, but it helps me build the logic. And if it makes sense, then I'll take it and I'll trade it.
I have just some questions on that in particular, if you want to hear them right now. So I trade like order flow, as you probably know from the future chat. But the way I see the markets is when we have low volatility. That means actually, when I think about it, but when you have low volatility, you know, you have a choppy market. You have regular non-institutional traders fighting against each other. So you have a choppy market, and then you have the big money, the institutions come in, and then that's what drives the price out of the choppy market. So I guess it does make sense in the way you think about it, that the institutions aren't trading during low volatility choppy markets. And that's because the institutions are the fact that the institutions are trading is making the markets high, or giving it higher volatility, because volatility needs a lot of money, means a lot of money is entering the market. So that actually does.
Yeah, I agree with that.
It does make sense to me. I think it works hand in hand.
Okay.
So yeah, they're not trading during the low volatility market because they're not trading at all, and then it gets highly volatile because volatility needs money. A volatile market is one where money is moving. A lot of money is moving very quickly. So a volatile market is, I guess, when the institutions are actually trading, because you have a lot of money going in one spot that's causing these highly volatile big movements. So that does really make a lot of sense to me.
Okay, that's perfect. Makes sense for both of us. That is even better. I have I have like everything here, to be fair. Well, I tried to start. I didn't do trendline. That's the only thing I didn't do, but I don't even use them really. But here's like the logic behind everything I use. If anyone wants to, is this low time frame stuff? Because no, it's just talking about like the logic behind each confluence and each concept, and like why things actually work, or trying to understand why they actually work. So if anyone wants to like screenshot any of this shit, you can. That was that. Here's EMA and like break a previous. EMA is really simple. That's just like a trend filter, basically. I don't really use profit taken, but I don't know. I see profit taking is just, I don't know. I prefer using breach a previous over profit taking. The kind of profit taking is just basically a strong move into a level. Kind of. EMA, we can get rid of that. And then why does price wick above? I swear I had more on that, never mind. Smart money, what it actually means. That's obvious. That's just big players. The liquidity cycle. Oh, I tried working this shit out. I still don't. I mean, this is obvious, but I think I've boiled my brain trying to get my head over this. Also working out like buy liquidity and sell liquidity. Where was it? I know buy and sell liquidity are pretty simple, but What was it that I just didn't? Oh, this. Yeah, it's profit taking. This just absolutely kills me. So why would price wick above a high if they're taking profit? Okay, what I'm referring to in this is, can we even be asked doing this? So let's say here, right? You've got a level. Oh, fucking hell. Why does price wick below? Right. It means closing a winning position. If you're in a sell, you're going to close out at a strong level, obviously. So this could be a nice level to close out your sell position. So why would price wick above, pretend this, let's just flip this around and pretend this is the high. Right? Because smart money wants to exit at the best price, and to do that, they need buyers to sell to. So if you want to, so if price is right, this is a really nice level that's been formed. You're in a buy from down here. You're looking to take profit at this level, okay? So why does it wick higher? Because the people who are in buyers right now, they need to sell their position to buyers. But then straight away that I don't understand. Why do you have to sell your position to buyers? Can't you sell your position to sellers? Because if I get out of this, I don't know. Because if I get out of this buy position, can't it be filled by people who are looking to sell? Or can it only be open for people wanting to buy? Wick equals above a recent high. There's a cluster of buy stop orders, yeah, which is people who are looking to buy at this level. They set their alerts here. And there's also short stop losses. So people who are selling, they have their stop loss just above. So just above, you've got the buy stops and the stop losses. It triggers all of those, and those are both buy orders. Because the buy stop orders are buying the market, and the people who are short in the stop loss are, bro, you can't buy a buy. There has to be a seller and a buyer. No, but this is what this is saying. They're in a buy. They have to sell their buys to a buyer. They need buyers to sell their buys to. It triggers all the buy orders at once, creating a burst in buy side liquidity. Because for someone to get out of a buy, they need a pool of buyers. Right. ChatGPT time. Yes, they sell their buyers. Yeah, does that make sense? Does it not make sense? So if I'm in a buy position, for me to get out of my buy position at any time, I have to sell that position to another buyer. What the fuck does sell that position mean?
Okay.
Someone has to. So
this is something that. Sorry to interrupt you.
No, go for it. I need help.
This is something that order flow has really helped me with, but like, so when you see what I look for in order flow is two different things. There's these things. I mean, passive buyers, passive sellers. Those are like people putting in limit orders, right? And then there's aggressive buyers and aggressive sellers, which and aggressive buyers and aggressive sellers are people putting in essentially market orders. And they're the ones that are actually moving the markets. And so there's two ways to like visualize how you can exit a position. You can set a limit order, which will show up on the depth of market as like a buy or sell order. Depending on where price is, you'll only see the sell orders. So I can exit my position by putting in a passive sell. And when I'm in a buy, I can put in a passive sell, and that'll show up on the DOM. And then the other side is you can do an aggressive sell. So that would be you doing the market order. So someone who's trying to close out their buy order can either have an aggressive buy, can either do like a passive sell, or they can do an aggressive sell, because they have the choice of either. Most of the time, it's going to be a passive sell, and then you need in the case of a passive sell, if you have a large limit order on the DOM, you need a bunch of buyers to buy into your sell, essentially, to buy what you are selling. And that can either...
You lost me 5 minutes ago. I'm so confused. I'm just hearing aggressive and passive to the aggressive. Oh. Sorry, I appreciate you trying to explain it, but you just confused me even more.
In that case, I'll stop and then let you continue.
Rue, did you
and
understand
then if
that?
You wanna,
passive is a limit
if
order,
you want to
aggressive
learn
is market
more,
price. Tell me.
Yeah, that's pretty much it. So so a passive order would be like a limit order. Like I've set my buy limit, and then price taps it, and then I get filled, and then you get filled.
Whoa!
You get filled by an aggressive buyer.
Whoa, finish that sentence,
that's just how the market works. So if you're an aggressive buyer, you press market order, you press market buy, and you get filled instantly, right?
Yeah.
So that is you filling a passive buyer's order. If you're buying, or a passive seller's order, sorry.
So if you're aggressive, you buy and sell now. If you're passive, you set limits and throw your phone in a river. So that's what Rue said.
Yeah, pretty much. If you're aggressive, you're sitting there on your computer and you're clicking the buy market, sell market. But if you're passive, you're setting limit orders and then throwing your phone away and hoping it hits.
Okay. Well, I've asked ChatGPT, and we'll see what this says. It says, right, I'll read it out like a little story time. When you buy, you open a long position. To close that long, you must do the opposite action. You must sell. There is no close button in the market itself. There are only buy orders and sell orders. So if you're long one lot of EURUSD and you want out, you don't close it. You place a sell order for one lot. That sell order has to go somewhere. And that's where the buyer comes in. So you're in a buy. Your take profit is technically a sell order. And for that sell order to be filled, someone has to buy that sell order.
Yes.
So why don't you need a buyer to...
There has to be an aggressive buyer to buy your passive sell.
So one buyer and one seller is in a trend. If you want to sell, someone else must be willing to buy at that price. Where the buyers suddenly appear above a recent high, you tend to get two big groups of automatic breakout traders and short traders. Yeah. Yeah, preloaded. What do you mean I'm slow?
Don't worry, Leon. You just need to learn. You just need to learn order flow, and then you can understand all this.
Fuck that shit.
I think it's about time. You've been rejecting it too long.
I have. Right. So here you go. A fund is long 100 million EURUSD. They want out. Above a high is breakout traders and short stop. So what he's basically saying, let me just do some explanation here. We have our level that we want to get out at. At this level, you've got people who are... Oh, fuck. Fuck off. You've got the breakout traders doing this shit, right? They're waiting for a price to break out and do a crazy move. And you've also got the people that were short from, I don't know, maybe from here, from some shit. Level. And you've also got those. So basically what you've got here is you've got a bunch of stop losses from the short people and a bunch of entries from the breakout buyers. But that's a sell position, so that's buyers to get out their sell position. And to get in this buy position, they need people selling. So how is breakout traders buy side liquidity. This is buy side liquidity, I understand, because they're in a sell position and they need buyers. No, one sec. They're in a sell position. Oh no, this is a. Oh man, god damn.
Market theory is the main.
What is basic knowledge?
Main thing.
How you been hit on the head? Supply demand. Right, let me get it to explain like why the fuck breakout traders. Okay, they place buy stop orders above the high. Yeah, and they have short traders have stop losses above the high. Okay.
Also, to clarify, a buy stop is technically an aggressive buy because it does not show up on the DOM. It's not an order in the order book. It is something your brokerage triggers electronically is probably, but it's something your brokerage triggers through their algorithms or APIs or whatever. So if you put in a buy stop, it doesn't show up on the DOM as an order, a depth of market, which just shows where all the orders are. It doesn't, a buy stop does not show up there, and it is something that is triggered by your broker and not something that's in the market.
Okay.
So it shows up as an aggressive buy. Yes, Daddy Roo, that's correct.
So limit orders are liquidity. They sit in a book. Buy limit is our buy list, but yeah, that's not buy limit, it's buy stop though. Right. Buy stop. A buy stop is not actually a buy limit, obviously. It's a triggered market buy, yes. Your private reach is what? Yes. Yes. It means it aggressively hits sell limit orders. Because for them to buy in, they have to, yeah, sell limit orders. So is that buy liquidity? And if you're short, your stop loss is also a buy. Yeah, but then this one's a sell and that one's a buy, so how do they both buy? Market buy, oh, they both become market buy. Yeah, but it's not though. They're just going back at that. It's not a buy, it's technically... A buy stop is a sell. Oh, man. Do you know what I mean?
A buy... Wait. A buy stop is a buy. It's a market
No, but
buy.
a buy stop, someone has to sell for them to get in their buy stop.
That is someone who already has a passive sell or a limit order there.
Yeah, but right, the people who are short, their stop loss obviously is a buy position. Because for them to get out of their sell, it's a buy order. But for the people who are wanting to buy, it is technically they're buying a sell position. Right? A sell, whatever, a sell order or whatever the fuck it is. Right?
Well, no, if you're shorting, you need to sell your position to pay back your shares.
A buy stop isn't that. ChatGPT, please help me. Resting liquidity is resting limit orders in the book.
I'm a liar. Don't listen to me.
A buy stop is not liquidity. Does not sit in the order book as a limited order. That's what you said. Buy stop is a conditional market order. Yes. Ah, because it's not resting liquidity. Okay, it's not in the. It's just a normal market order. It's not actually in the book at all. Because technically this... Okay, so this is literally just... Market buy consumes sell liquidity. Yeah. So a buy stop isn't liquidity, it becomes a market buy. A market buy isn't liquidity, but it takes sell liquidity. The sell. Oh, just shoot me in the brain.
Don't worry. Sometimes I'll be sitting there and be like, "What the fuck was this again?" No, I forgot.
Go on then, Mr. Scotland. You explain it. You explain how this makes sense. How are both of these positions buy liquidity? Oh, it's going to take you 3 years to bloody type it. Oh, you're at the gym, aren't you? Never mind. I just don't understand it. Stop orders are liquidity takers. And limit orders. I mean, that kind of makes sense. So it takes buy liquidity, and this one provides buy liquidity. Buy stop gets smashed, and then it becomes a limit. Oh. Because they're higher than... What's that? Remember, if you're short, you have to buy yourself out of position. Yeah, I know that one. This one makes sense. Because the stop losses, for them to... Yeah, they have to buy the stop. Yeah, buy the sell. Yeah. Whereas this one, technically it's a market order. So they're using up buy liquidity. You don't provide any liquidity. They use buy liquidity. So isn't that bad? Because these hedge funds and shit want as much buy liquidity as possible. But these people who have buy stops actually use that liquidity. They just want stop losses. Next question. So buy stops use buy liquidity, not provide it.
Here's another thing to think about.
They take sell liquidity. What the fuck is that about? Where did sell liquidity come from? Go on, another thing to think about it. Go on.
So the way the market moves is you're constantly eating up buys if you're going down, and you're eating up sells if you're going up. It doesn't have to be a stop loss, or it doesn't have to be a non-institutional trader that is providing the liquidity, that is providing the support. Essentially, what I look for when I take a trade is are the buyers able to outbuy all of the passive sellers? And so when I see a lot of buying jump into a zone of liquidity that has a lot of passive sellers, what I'm looking for is, do they get stopped right there? Is there not enough buying to push through the passive selling?
Yeah.
And so if you have a fuck ton of money and you have positions that were placed all over the market where you profit off any sell or buy, do you really have to wait for a bunch of schmucks to take their liquidity? You can put in your own sells to exhaust. We call it exhaustion. You can put in, as an institution, you can exhaust the market in buys yourself by taking profit on positions you made months ago. And then that's how you can also move the market. So as traders, we're not looking to beat institutions. We're looking to trade with institutions.
Yep. Yeah. Yeah, I get what you're saying. Yeah.
Yeah.
Hit sell limit orders. Okay, maybe I'll just leave this. I can't be arsed understanding my strategy anyway. I don't need to. Fuck
Yeah,
it.
you need at least like 2 or 3 hours to figure out. Because this one was a real. This one it takes a while. It takes a while to. It's not your strat. He's right. It's not your strategy. It's a whole.
No, it's
It's a
just
whole
nice to
other.
understand. Obviously, the strategy is levels, and like the entire, like for example, like my stop losses, I always cover the wicks and make sure there's space and stuff like that. And the reason I make sure there's space is because of this exact reason. Is because of why the market grabs liquidity and stop hunts, like all these highs and stuff. Why the fuck does price push up, hit stop losses, and then make the move? I want to know the logic behind that. And obviously it's because they need more liquidity to enter these bigger positions and shit like that. And where's the liquidity above the highs? Because, you know,
maybe we
stop
should
losses are.
talk more about that because I can often, when I'm not being stupid, I can see like when those wicks happen or why those wicks happen essentially.
Yeah.
And I feel like I have like an understanding of like what makes the wick essentially.
Yep.
And I'm not the best at it, obviously. I'm not living off this. So but
Well, if you really want to sit
I
there and
think-
try and explain it to an absolute idiot, then you're more than welcome. Let me know.
I'd be
But
happy
promise
to. I'd be happy
I will
to.
understand.
I think it's
It's good for you.
I just think
it
I
helps you.
thought it was became extremely interesting when I started looking into how that works on like that level, like an order flow.
No, I
volume
enjoy it as well.
specific level.
Yeah, I like
So
it
if
as
you
well.
ever want to learn more, just let me know.
I will do. Overknown as criminal. Yeah, it's not like this is going to change like my strategy or anything. It's not going to change the way I trade. It's just I like to understand things. Otherwise, it doesn't really make sense to me. I'll still obviously execute and follow my plan and stuff. It's just I prefer to understand why I'm actually doing that thing. Yeah, okay. Well, that was the market breakdown at least done. Fuck me. Right, YouTube, thank you for hopping in. I appreciate it. You lovely people. Leon, market broken down. Leon broken down. Yeah, that's more like it. YouTube.